Hello folks, I'm Melly Little and this is your daily TA Wrap, where we look at these markets from a neoclassical perspective each night, asking ourselves what happened today and what might it tell us about the coming days. I do this show 4 times a week, Monday through Thursday, live at 9 o'clock Eastern Time here from the base of the beautiful Rocky Mountains, folks. I do have a programming note tomorrow. Persian New Year will not be airing, so I'm going to take a night off. So no show tomorrow night. I'll be back on air Sunday. We do a Sunday show that's a weekly, a broader perspective. And I'll be back on, of course, at that time. If you have questions, if you want me to answer any questions you have, you can send a text message to that number. You can email me at support, or you can live stream chat room like Federico's doing over here, and I'll even chat with you as I did with him. So 3 ways to reach me. If you have questions, shoot them over to me and I'll try to answer those questions for you. As far as today, well, today was Fed Day. And what happened today? Well, I think personally, and I when I trade, I don't turn on the TV, I don't turn on any news, I don't watch a lot of feeds, I really watch price action. And when I'm usually trading the Fed day, I typically don't listen to anything other than to read the Fed statement as soon as it comes out and then trade the price action off of it. Today, however, I did tune in because I wanted to see what kind of impression Yellen made, because she had some big shoes to follow, in my opinion. That's Bernanke's. If you think back about Bernanke, say what you will about him, that man exuded confidence. When he came out there, he was never shaken by any question. He always had more tools in his toolbox, right? He always had 100% answers, right? In other words, there was no doubt in his mind that he knew what was going on. As much crap as that is, that's the way he presented everything. And the market got to where they believed it. So Yellen comes out, she's got to fill the same shoes. What does she do? Well, first of all, she yapped forever. I mean, it was like going to Auntie Yellen's house and having afternoon tea or something, and he's sitting there talking social life. And she just yapped and yapped and yapped. And I don't mean that in a derogatory sense from a man versus a woman standpoint, but we're talking about the Federal Reserve Chairman, the most powerful position, honestly, the most powerful position in the world. You've got to have crisp answers, you got to be on message, on target, and you got to not fumble around. And I really felt as if she fumbled around a lot, especially when I compare it back to what I used to see with Bernanke, in terms of sound bites that I would see here and there from him. So that was the first thing. The second thing, they wanted to remove that language that they had with respect to when they were going to raise rates, what was the criterion that they were going to use to do that. And they wanted to move it away from quantitative, the 6.5 unemployment, the 2% inflation, to something more qualitative. Well, it was very interesting because they didn't remove the quantitative part of the inflation number. Because why? Because we're not near it, right? In their book, we're not near it. Because the Fed loves inflation, right? You got to have inflation. You got to have lots of inflation. Why is that? Well, because you got so much debt out there. If you don't inflate it away, it's going to cave in at some point. I mean, folks, that's what's going on, right? I mean, just look around. How can you get rid of all the debt? Well, the only way you can get rid of it is to pay it back through cheaper dollars over time. So you have to keep the confidence up, and you got to make the dollars cheaper. And it's not vis-a-vis the dollar has to be 70 now when it was 100 before, because you got floating currencies. It's just that everybody's got to be worthless, and that's essentially what they're doing, right? You tell me, does it cost you more to live now than it did before? Is inflation running at 1% in your household? Not mine. And I don't think anybody else's. So we got inflation out there. We do have price inflation. And we have a compression of wages, right? But they left that number where it is because they're underreporting it as it is. And they want to push more inflation out upon us. On the qualitative side, they did move the 6.5 number, but they gave all these other kind of things. You know, I think they talked something about her dashboard. You know, what's on her dashboard? And there she gave all 3 or 4 different things. Folks, that's just confusing. I mean, it's confusing enough to try to figure out what the Fed's going to do. It's even more confusing when they start giving you 4, 5, 6 numbers to look at. So, in sum, and I don't want to spend any more time on this, but in sum, to me, that press conference was a disaster. I think the market took it as a disaster. They traded down on it, not that bad, but down on it. Here's the SPY. I wanted to show you inside what happened. I'll do like 5 minutes. These are always sloppy the first day, but here's your Fed meeting, right? That's 12 o'clock my time, 2 o'clock Eastern time. You sell off, right? You actually sell off pretty hard to start with, those first 2 bars. These are 5-minute bars now. You sell off pretty hard, pretty fast, and then you come back up, press conference going on, you're kind of hanging up here, and then all of a sudden it just dives, right? And then, of course, they bring it all the way back like they always do with this market. But folks, this market sold off. It sold off. Volume expanded a little bit. Tomorrow will be an interesting day. You know, you got a big Fed buy operation again tomorrow. But those big Fed buy operations are going to get less and less because you taper another 10 billion off today. You're going to taper 10 every month. This market is going to have an interesting day tomorrow. Let's say that at the least. Let's look at the ending numbers. We had the industrials down 114, not that bad. They were down almost 160 or 70 at one point. 126 was the low, so that was actually 100 points more, 200 points down on the day at 1.7. I mean, the losses weren't huge, anywhere from 3/4 to 0.5%. Gold got slammed, $22 down, $13.29. This thing's going under 1,300 again. Silver actually got a little bounce today. Dollar got a big bounce. Dollar's been lagging for quite a while, and today it did get its bounce finally. All in all, not exactly what you would want on a Fed day. Let's go to the charts and see what we got here now. Looking at the charts themselves, right, they don't look that bad. Right? I mean, I can look at this and it's not that bad. The problem is that you got right up to the top, 1874.40. Today you got the 1874.14. You did rise into the Fed meeting, so you could say, okay, it's just a little pullback in the sense that you jumped 2 days in a row into it. But you came up there, and when you tested, and you missed it by 30 cents, but essentially you're testing that area, right? You got up there, you didn't have as much volume as you did on that bar, or on this bar, or lo and behold on that bar, which we didn't get to the top of, or even the bottom of the high, right? All of those, you got less volume, you go up there, you flip around, you go over, back under, you actually had more volume, so that doesn't matter. But this is telling you it's going to struggle a little bit up here, and it's still a range trade. At least a range trade for now in this higher range. This market, though, and I'll be the first to tell you, this market is extremely hard to trade right now. If you're a trader, it's difficult. You kind of got 3 areas. You came into the bottom. When you flip back in, you're stuck here in the middle right now. I would think that whichever way this breaks is going to be the next larger move. In other words, when it breaks this range, right, that's when and stays there for a day, right, that's going to give you the larger move, because one way or the other, it's either going to go test the highs and try to break out. Matter of fact, if it gets over this 1874, I suspect it will test those highs and probably break them. On the flip side, if it goes the other way, you do have an ABCD structure, even though now it's really not, it's pretty slight. There is a swing point low here. You may get another swing point low here if you gyrate around in this area long enough. You do have options expiration this week, so that's 2 more days that they'll try to hang in here, I would think, right? Because right now they're going to expire most of those things worthless. So if that's the case, right, that's going to give you 1, 2, 3, 4, 5 bars, and then you got Monday would be 6. If you do not hit that low by Monday, then look what you got. You got a swing point low here, swing point low there. That could be a faster move to the downside if it breaks. So just keep that in mind as you're going forward. Okay, so that's enough of that one. Let's flip to some of these other guys and see what we got here real quick. So index-wise, I don't think there's really much to talk about. They all look the same. NDX, all of them. There's really nothing here. Let's pop over to the sectors real quick. The only ones that I saw here that were interesting was the semis. Semis went over the highs, tested the highs, didn't have the volume, failed back underneath. This thing should try to pull back. The XLB is under pressure given all the metals pressure right now. That looks like it is going to set up an ABCD down. And that one moves, well, it's not huge, but it's a decent size one, right? That one will get you down here to these lows as well. What was the other one I was looking at? Well, the XLV. XLV comes back over the, it tested that high. 2 or 3 of these tested the highs and failed. So it tests that March 13th high, fails, less volume. The XLY goes up, tries to get to that high, never gets there. This looks like an ABCD structure on the way down as well. And I did see the XLK actually get over the highs and tested and failed on the 11th. So again, if you take the 11th and the 13th bars and you line them up, right, that's the area you have to get over. It got over it yesterday, couldn't hold it, got over it again today and failed underneath it. So it finally is showing some sort of a failure. And now, of course, it needs to trade back down if it's going to. The one that hung tough today was the XLF, the financials. These guys didn't want to give it up today. Now they did come up, that 13th bar, 22.29 is the high. They got to 22.29. Volume over there was 569. Volume today was 567. So you tested with enough volume that you could go up there and try it again. But do pay attention that the high, the bar prior to the high had 662, which is also has a low of 228 or 22.28. So you actually went into that and failed. This does look like it is going to try to come back as a result of that. So financials, even though they hung tight today, they finally gave it up. Let's go over to the ox markets here, and we'll start with the dollar. The dollar's been beaten down so bad for so long. It's amazing that anybody will finally buy it. They did today in a kind of a gusto fashion, big spike up on the Fed news. Let me look inside this for the intraday. I'm assuming that, I wasn't watching it that close, but I'm assuming it all came, yeah, right on the Fed numbers. So came right at the time of the Fed announcement, never gave it up afterwards. So that was really based on the ideal that we are going to continue to tighten. So the test on the way back up is the swing point low. That's a 21.47. We traded to 21.46. Did 1.1 into 1.2. Very interesting. So what I'm doing here, if you're new or if you just need to brush up, is I'm looking at the retest regenerate. Actually, it's not anymore. It's just a resistance zone now. You already had the retest regenerate here. Tested up to the top, failed, came back. So now the next one is there, and that one was also tested. So really, it's just resistance zones now. So as we pop up here, it does look like a failure. It's going to need some more juice. This thing probably fades a little bit tomorrow, or if it does get up and over that, yeah, it could. I don't, I mean, it's close enough. It could actually rise again tomorrow. So anyway, big bounce in the dollar finally. Bounce in the dollar means gold should have a hard time. Remember, gold couldn't rise the last 2 days, even though the dollar couldn't move up. So gold comes down hard finally. Remember, it came off with volume, right? And then you kind of did this little doji thing in the middle. Now you come off hard again with volume. And gold has, they're not lined up tightly, but you break a swing point here. You got another one you could break tomorrow if it continues on. I think gold will see a bounce tomorrow though. And then you have another one down below. Let me look at the weekly on gold. So on gold, whoops, what was that? Here we go. So on the weekly, yeah, it's coming back. It's going to have heavier volume, it looks like, on the weekly. You know, gold can come all the way back to the top of this bottom bar. It's 124.70. It's trading at 127.94 on the low. So that's another $3 down. That's 30 bucks. 30 bucks off the price of gold. Where did it close today? On the futures was, yeah, takes you down to that 1300 number. So, all right, so that's gold. And let me see, is there anything else? Oh, bonds. Let's look at bonds. So bond. Now this was interesting today. Bonds sell off along with stocks today. Bonds sell down into the bottom of that lower range again. And, you know, it's going to be curious to see if they bounce tomorrow because, you know, they're back in this lower range one more time. And they did have some decent volume today, right, as they came back into it. Let's get a number on this. So that low before was 11,814. So you're almost as much volume as you're approaching it. They did bounce at the end of the day. Yeah, I don't know. You know, this looks like it can test this tomorrow. So bonds may try to sell down a little bit more to buy tomorrow. But if the market does work its way lower, and especially if it does it in a fast process, you're going to see these bonds flip around and go back the other way again, even with this quote-unquote tapering going on, and this idea that interest rates maybe, you know, that was the other thing today is, you know, everybody's making a big deal that interest rates are going to be raised in May, potentially in the spring, you know, April, May versus June. Well, come on, 2 months? Are you serious? You're gonna get a 0.25% raise in the Fed funds rate, and it's 2 months early, and you're going to sell off? I mean, come on, folks. I mean, that's not really what was happening today. Sometimes the news is pretty amazing to me. All right, let's go. Let me look at the GCC right quick. I want to look at the continuous commodities. Still hanging up there pretty good. So the droughts really got the DBA and all those guys moving. So let's see if DBA. I think the grains were up again today. Yeah, they hung up there too. So, all right, let's see what your question is. So there was a question on FNV. FNV is they're not a gold producer. They're a financier of gold companies. They take payment in gold as well as in cash for their financing of gold stock mining companies. But they also do the same thing with oil drilling companies, and they take money there as well. So they're a little bit more diversified than like a Royal Gold, for example. They come down, get a pretty good shot down today, and you know, they break a swing point low, and looks like they're trying to get back into this bar. So the question here is, where do you buy this thing? So you got this bar it came into. The bottom of that bar is down in this area. So it's trying to get down there. It's pushing back with about as much volume, right? Volume is almost the same. So in terms of, you know, shooting down there, it doesn't look too bad yet. When you get there, then of course that's the test. But if you look at this guy on the weekly, you know, it's coming into a huge bar on the weekly. Here's the weekly. And you can see it's coming back in this high. That's the retest regen. Now it's after, let's see, it's after 1, 2, 3, 4, 5. So it's after 6 bars. And if you're after 6 bars, that gives you a much higher probability that it's going to stick, right? In other words, it doesn't, if you come back within 6 bars, a lot of times you'll get deeper into the bar you're testing into. And a lot of times you'll get to the bottom at least of the bar that did the breaking. And this was a suspect breakout. So the fact that it's coming back, it's after 6 bars, gives you a pretty good chance it's going to get bought here. And you got this huge volume on that bar. So it looks to me like tomorrow might be the opportunity. They did report earnings tonight, so one needs to take a look at that and see how it trades first thing in the morning before you do anything too serious with it. The other question is here from Tommy. He says, looks like the EEM broke down today. And yes, Tommy, it did. And yes, I'm sorry, I did call it wrong. It looked to me like it would get a little bit more of a bounce today before it broke, but it never did. Started down and just kept going down. So the question here is, would you say 37 on the weekly support? Well, let's pop to the weekly and see what we got there. Alright, so it's back. This big bar's top is 38.60. Closes inside of it. Yeah, 246. This is starting to set up more problematically. That's going to be a swing point low this week, unless we just really dive, right? Because you got 6 bars here, right? This is the 6th one. So once this prints, which means Friday, this becomes a swing point low, and then you've got another one over here. So you're going to have 2 swing point lows almost together. If they break those, you're going to get 1 to 2 bars, 2 to 3 bars extension down, and that low then looks like it could be the test, right? So, like I was just talking about when I came on the top of the show and I was talking about the SPX, if this thing breaks all the way down into here, that's kind of the last area to support this thing on this time frame. Let me look at the monthly. So that's roughly at 36. Oh man, yeah, I forgot about this. So on the monthly, it's even more interesting because you got all these swing point lows sitting down there on the monthly, right? And you certainly don't want to see this thing breaking monthly as well. So that monthly is the same bar, 36 area, and then you got another one sitting over at the exact same place. So that's a lot of support, but at the same time it's a lot of risk when you get down there. So this is a lot more dicey than it was before. Let me go back to the daily. Okay, so on the daily, all these swing point lows have already broken. I think the 38 area is the area, right? If I'm looking at this, I'm looking at this little range right here, and that's probably where you're going to see this redraw tomorrow. Right, you're going to see the TA today charts draw this as kind of the main support zone left, and there'll probably be 2 of them down here. You'll have another one underneath it. This particular area right here looks like the area to me. So if it doesn't hold here, it's going to test this bottom, which is that 37 number you're talking about. But that's more problematic. If I'm going to buy this, or if I'm going to decide to hold on to it, it needs to hold this area. Let me go look at the world markets. I have about 4 minutes left, so let me pop over there, and I'll start with Hang Seng. Let's see what she looks like. So this is the Hong Kong market. Yeah, it's just hanging there, and they're probably going to get pressure tonight. So this is not a good scene. It's going to try to test lower tonight. We'll see how far down it wants to test. And let me look over. I'm assuming India's coming back. In Brazil, we saw had a nice bounce. So India's still hanging up there. That's good. Brazil, it's got a nice bounce going. It's going to retest, regen up to the highs. Yeah, it looks like it can hold. It needs to hold that 38 area in my mind, not the 37. Okay, let me pop over while I'm here. Let me see what my friends in Australia are doing. Some members over there, of course. This doesn't look too good for them. It looks like I'm not getting my volumes for some reason. We'll have to look into that. So it's coming back in to test back into this area. So I need the volumes. I can't make a good call on that without any volumes on it. I guess I could flip over real quick to see what they look like here. And they don't look so good there. How about my friends up in Toronto? Let's see what we were thinking this guy would try to come back. Forget that, huh? Right back up to the tops. I guess if you devalue your currency enough, you'll go higher. We should see the topics try to jump a little bit tonight potentially. It's been down, and man, it's like I'm not getting my out of Asia. I'm not getting my volumes. I would think that these guys try to bounce a little bit tonight because the yen sold off so much today on the strong dollar. Let's see if Taipei has volumes. Yeah, that one does. So for some reason I didn't get those quotes. Volumes. That one's coming back in, going to test again. Let me quickly look at Europe. The last couple minutes here. The German DAX. Pretty good bounce, but I think they're going to get slammed tomorrow. They left a high volume low. They broke a low. Well, this is, this says you're in a range trade now because you came back, you retested, and you did not regenerate lower. So now you're probably in this larger range and probably going to trade inside that larger range for the foreseeable future. And that range looks like from about there to there, and it's almost at the top. So expect some sort of pullback there tomorrow, especially with the news of our pullback, I would think. The FTSE, a lot of metals here, they should be having trouble, and they are. They come off, volume expands. They're going to try to trade lower tomorrow. And let me see what the CACs. CACs, for whatever reason, has been the strongest one over there. I guess their little money printing press is doing pretty good too. That being the government printing press. That one doesn't look so bad. A little pullback, but it will trade back into the support zone tomorrow. The markets, even though they sold off today, they don't look that bad, right? And they didn't sell off that bad, 0.5%, 0.75%. The follow through tomorrow will be the key. Does it follow through the downside or not? And even though you have options expiration, you would expect some sort of follow through. And all I'm suggesting, and when I'm saying this, I'm talking about now. What do you look for? You want to see this come back down into this lower range if you're bearish, right? And potentially close underneath today's lows. That would be the most bearish scenario. If you want to be bullish, you go right back up and you test this top again, and maybe you break it. That would be the most bullish scenario. But right now, I think the key is the range. How does it trade in this range, and which side's going to win the range? That's the range. It's inside of it. Is it going to close underneath it and get back into this lower range, in which case it has a good chance of trying to break down? Or is it going to hang up here? I think that it's going to be a tough thing to get over this and keep going after today. But this market has fooled me so many times on the strength of it that I'm almost concerned to suggest that it won't be able to do it. But it doesn't look like it's going to me. And I didn't think it would get there yesterday for sure. And today you come back a little bit. I think it's going to be a tough row to hoe tomorrow. Given options expiration, we probably hang here. We probably hang in this range, maybe in this lower range a little bit into the end of the week. Have yourself a great night. Thanks for joining me. You tell a friend, tell two. As always, I'm LA. This is and was your daily TA wrap. Have yourself a great night and take care. I'll see you next time. Good night, folks.